So 1031 exchange is a very, very valuable tool. And if we have time, I'm going to just go through some of the details of that.
Yeah, and then
that'll be fine.
That will be, yeah. Just so that to make the point too, it does have to be of, and you maybe you're going to be covering this too, but it has to be of the building you're going to invest in, the secondary one after you've sold, has to be of equal or greater value as well, right?
That's correct. Yeah, and that's going to be part of the criteria that I'm going to go through with you right now.
Great.
So 1031 exchange basically allows you to defer the capital gains tax on the sale of that property, and that's allowed by the Internal Revenue Service as long as we sell investment or business real estate for other investment or business real estate. So again, that's called the 1031 exchange. And I already explained the difference between like-kind and personal use, so I won't repeat that here again. Now, from an estate planning point of view, this is tremendous benefit to real estate ownership, but it's also a tremendous benefit for estate planning purposes. And what I mean by that is this: let's say you bought that dental office building for $500,000, you sold it for $2 million, you deferred the tax, so you didn't have to pay the tax on the $2 million. Now you're out of the practice, you have that money invested in another property, you're collecting income from that property. Let's say 30 years later, you're 100 years old, you pass away, you die at that point. That property you bought for $2 million, let's say now is worth $5 million. On your date of death, that property now will go to your beneficiaries. It's treated as if your beneficiaries paid $5 million for that property. Guess what? Tax deferral, remember we said we deferred the tax,
right?
You didn't have to pay it until you sold the property. Being that you never sold the property while you were alive, you never paid the tax on it. But now the story gets better. Your children will inherit that property at that stepped up basis value. They never pay a penny of tax. So now we just turn tax deferral into complete tax avoidance, which is completely legal. You're allowed to do this. Can't tell you, I could give you dozens of stories where people made the worst decisions of their lives, and they didn't talk to me about it until after they already sold the property. Well, guess what? I couldn't help them at that point. Time to get help from your tax advisor is before you sign that contract, so you can structure these things the right way. So that to me is a huge benefit of real estate ownership. You got the benefit over 39 years of deducting a phantom deduction under the assumption the property is losing value every year when in fact it's increasing in value. You then do a 1031 exchange, avoid the tax, but could still get rid of that office building. Maybe you don't want to be in New York anymore, and that's where your practice was. You buy a building somewhere else. And then you leave it to your children, wherever your beneficiaries are, and they don't pay a penny of tax on it either. I don't think there's any better strategy out there from a real estate tax point of view than implementing a 1031 exchange and holding it till the very end. And by the end, I mean until you pass away.
So it's important that people think about it, not just in terms of the dollars and cents. I mean, it might seem intimidating for a younger doctor, especially they're on their own, maybe in practice. Maybe they bought out a senior doctor's practice and that senior doctor wants to sell them the real estate. I think it could be intimidating to look at that type of debt you're taking on now. You have your student loan debt, you have some practice debt as you're buying out a practice, and now real estate debt. But what you're saying is look at it over a long term, and you're going to be paying rent anyway. Yes, you have some more management headaches, and owning a building and a property comes along with certain responsibilities, obviously, insurance and taxes and all of that. But if you work with good advisors and you budget for that accordingly, you have some significant tax advantages during those years as well, plus the depreciation, plus then this asset that can outlive you, essentially, just because you were able to deal with some of those maybe additional expenses or debt in the beginning. Thinking about this over the continuum of all your practice years plus beyond is really important.
100%. It really does make a big difference. So if a bank is willing to lend you the money to finance the purchase of your dental practice, even if you have a high student loan debt, and they're willing to lend you the money to buy the building, my suggestion is you plan on being there 10 years or longer, just do it. And one thing that really drives me crazy I have dentists that they'll come to me. They rented a office space. Let's say it was a broken down office building. They just invested $1 million of their own money renovating somebody else's property. Forget about the dental equipment and all the money that goes into brand new wiring, new plumbing, new sheetrock. They've renovated this whole building.
Yep.
They did this for the benefit of the landlord.
Yep.
Are you kidding me? That makes no sense.
Yep.
So I'd rather see you borrow that extra money, buy the building, now make the improvements to your building. You own that building. So that building may have been worth $500,000 after you made those improvements. The building, right after you did those improvements, now worth $1 million. Why give that money up to the landlord? To me, it doesn't make any sense at all, especially with all the other benefits I just mentioned to you. So it is a game changer. So strictly from a tax point of view, buying the building is definitely going to be the way to go. If there's other personal issues, like you said, you don't want to worry about managing the piece of real estate, maybe you shouldn't be in practice yourself then anyway, because managing a piece of real estate is a lot easier than running a dental practice.
Oh yeah, so without a doubt.
Definitely got to think about that.